Hey traders, hopefully you're having a good week. We're going to be going over a bunch of economic stats that we usually go over, but we haven't gone over them in a little while, and then we'll get right into the charts. But first, we're going to look at some data first. So first, we're going to look at the initial claims and the continued claims. So this is the amount of brand new people that are applying for unemployment insurance, and here's that initial spike from the lockdown. And even 1.877 million people applying on a single week for unemployment insurance is still a significant amount of people. But overall, we have seen a decrease. But what's not great to see is the continued claims actually is not decreasing as much. So there's not that many people going back to work yet. We saw a little slight decrease from early May into mid-May, but we're not really seeing that decrease. Ideally, we would like to see this go down if more and more people are going to be going back to their jobs. One thing that was surprising that we got was the unemployment rate actually going down. The forecast was, I believe, like 19% or something from 14.7. Actually came out to be lower at 13.3. We talked about it in the previous global macro update, but there is some fudgy numbers here that came out because I personally don't think that is exactly true. But we'll get on to the consumer confidence. So even in the midst of COVID, oil crisis, and the crash, as well as the riots and looting, I agree with the movement, but the riots, looting, and destruction of cities obviously is not a positive thing whatsoever. But not really going to get too deep into that. The consumer confidence overall is actually pretty decent considering the things that are going on, in my personal opinion. So you can see this is from highest to lowest. In the previous one, the last one, New Zealand and Australia, consumer confidence is doing really well. United States is up there, 72.3. Spain's up there. Japan's not doing so great. And then the European countries are definitely taking a hit here. Almost 19% for Germany. UK is not doing well. Switzerland's not doing well. But Europe definitely seems to have been hit the worst in terms of consumer confidence. Australia and New Zealand and the South there are definitely doing the best so far. In terms of retail sales, basically everyone's getting hurt because of the lockdowns, making sense. Surprisingly, European Union not absolutely terrible, and then we see Germany and New Zealand not terrible, but then UK and Spain really getting hit hard in terms of the retail sales. United States up there as well. Switzerland up there as well. But overall, really, retail is getting hit, and investors are looking for places to put their capital. And I think this is one of the main indexes that people are actually looking to put their capital in, is the NASDAQ. Since, let's just look at a year. It's past the all-time high. And let's go to year to date. It's past the year to date, so it's pretty unbelievable. And we can see some of the companies that are in the composite. We have Microsoft, Apple, Amazon, Alphabet, Facebook, Intel, Cisco, Comcast, huge at-home companies. So the proof is in the prices, definitely. Money flowed from mainly large cap stocks and I guess non-at-home type companies into just a few handful of companies that are really taking on a significant portion of the market share. And we see that this is only going to rise, hasn't really moved from the last time we talked about it. It's on a quarterly basis for the frequency, but overall we are going to see the e-commerce retail sale as a percentage of the total sales increase, and we're at around 11.8 right now, and it's grown quite substantially. In 2010 it was around 4.2, so it's more than doubled here, more than almost three times the amount of retail sales in percentage of total sales. So what does this mean for brick and mortar non-digital corporations? Well, it's going to be pretty difficult, and we see that the bankruptcies are quite substantial. We see in the US huge numbers here. Switzerland, UK, Hong Kong, Italy, Russia, Germany, Spain, Sweden, Japan, Australia, Denmark. A lot of countries are seeing an increase. And let's actually just open this up here and look at the max chart. Not terrible. We're seeing a decrease, but overall, we are looking like we're potentially climbing up here, where we're seeing that increase from February onwards. Oh, 2019. Wow. That's a substantial boost. I didn't even know that was 2020. That's 2019, and we're only going to see an increase, I think, from here. But I didn't know that we had such a substantial move in 2019. All right. Now, different from the consumer confidence, this is the business confidence, and we're going from lowest to highest. UK absolutely getting crushed. Scoring the lowest in business confidence in all these countries here. New Zealand is third, but mainly second in terms of kind of countries that are related to what we're trading. EU is really down there as well. Australia is really down there as well. Japan, but United States not doing too bad. Switzerland's actually doing pretty good, over 50. But US is doing better than I thought, to be completely honest. All right, so now we're going to look at a bunch of different indexes from different countries. First, we're going to look at the US. They've performed the best out of any other country in terms of their stock market recovering and overall bullishness in terms of the numbers. Don't really like to look at China because you can't really trust that, in my personal opinion, but US is definitely taking charge with the equities, with the risk on environment. So this is the NASDAQ. The previous all-time high was 97.18, and now we're at 10,000. So we broke that key level, which is a pretty psychological zone for the overall investor to really, really view that as a bullish sign. And on this website as well, you can see the components of the index itself: Microsoft, Apple, Amazon, Alphabet, Facebook, Intel, Netflix, Nvidia, Adobe, Cisco, Comcast, Tesla, like huge names, Costco. So it makes sense. Now let's look at the S&P. S&P has not hit all-time highs yet, but it has recovered since the move to the downside, and we can see since the year Microsoft's at 50%. That's pretty unbelievable. Apple's at 81, Amazon's at 42. That's pretty crazy. All right, so this is going to be the FTSE 100. This is the UK stock market index. We can see it's not doing as well, right? The UKX is down 14.75% from the year start. So not seeing that recovery that America is seeing. Germany, since the year, is around 2.84, so it has recovered from January. Can't be. That doesn't make sense. I don't know if this number is going to be representative, but we can see DAX is not recovered to the high there. Don't really have a retracement, but we're not really seeing as big of a bounce in the DAX. This is the French stock index, definitely not even close. We're not even close to nearing that high. This is Italy, same kind of story. Switzerland, same kind of story. Japan's doing a lot better. We see that this is the recent high of 2020, and the Japanese Nikkei 225 is doing better than some of these other European countries. Seeing Europe is definitely getting hit the hardest in terms of, if we're just comparing the Western, Canada/US, and then Australia, New Zealand, and then Japan, and then looking at Europe, Europe's definitely getting hit pretty hard here. China, it's a little bit of a noisy market, just going back and forth, really pretty volatile. And this is the ASX, or the Australian Stock Index, which is not really even, I don't think, 50% recovered from that massive fall it had. But overall, that's the equity market. And then this is New Zealand. New Zealand's actually done a lot better than the ASX. New Zealand has, I believe, completely eliminated their COVID crisis and are beginning to basically open up their economy to what they consider to be normal levels. We'll see how the consumer reacts and how the business activity is. But at the end of the day, New Zealand does look like they are doing better in terms of the overall recovery compared to Australia. So now we're going to go back to the States and do a few just quick looks on some Actually, this is first. We're going to go over this last. So this is what I was initially looking for, is financial stress tests. So we have two. This is the St. Louis Fed financial stress test, and we can see if we zoom in, this is 2008 showing, or 2008-9, the financial crisis, showing the severity of the previous stock market crash and the level of recovery we got and how quickly we went back under that zero bar. That zero bar is going to give us a good average or a good range where the stock market is more stable, is in less financial stress. And let's just zoom in a little bit here. We can see that we're basically right back under this zone here. Kind of surprising, but the market's still chugging along. Next thing we're going to look at is the Chicago Fed National Financial Conditions Index. Similar, we can see this is the 2009-10 financial crisis here, and we were moving up pretty quickly, but we can see that it really did not make it very far. We rallied to the upside, and the buyers and the bulls were able to contain the sell-off and really recover with a V-shaped recovery, which, like I said again, is a little bit to my surprise, but we gotta just view the price action and understand that there are definitely some larger things at play here. So let's finally go over this last thing we're going to look at is the central bank liquidity swap. So this is going to show if the Federal Reserve is basically providing liquidity to other central banks because they need US dollars to transact on the national scale or national global trading market in commodities, basically. So if you are trading oil, gold, silver, coffee, copper, any real commodity, you're going to be doing it in United States dollars. And if you're a business that needs to buy commodities, you need that US dollars. And the native central bank, wherever you are, would normally provide that for you at an interest rate. And then they needed to be provided by the Federal Reserve, and this is what we're seeing right here. So they're still providing liquidity to central banks, so there's still a need for US dollars internationally around the world for businesses that are transacting. So that's interesting to see. If this goes down, obviously there's less need for US dollars, but this more or less is just trying to understand the dollar milkshake theory. If there's a lot of companies, corporations, countries that need US dollars, and this is increasing substantially, well, that could create some level of a dollar increase situation where everyone who has borrowed US dollars is short the dollar, and this could be a massive, massive short squeeze. Only a hypothesis. Right now, we are seeing the dollar weaken substantially, but right now that's just what we're playing off of in the FX markets. But in the kind of long-term time frame, I think that could still be an outcome for the overall market. So now let's look at some of these charts here. We've already looked at all these indexes except for the E-minis. We looked at the S&P. This is the Vanguard world equity, basically. So this is all the equities in the world. And let's just quickly look at the Russell 2000 because I think this is a good illustration of what's currently happening within the market. Let's take a little bit of a snip and discuss what we see. So first things first, we had a massive rally back up, which we already know of. We need some level of exhaustion. We're not going to go from point A to point B in an absolute straight line without any sort of pullback or hesitation. It just does not happen. It might sometimes, but even with the most aggressive moves, you're going to have these pullbacks. You're going to have these situations where the market has to take a breath. I think we're in that situation right now where we are in a pretty well parabolic move. This is the Russell 2000. So this is going to be the small caps, indicating more speculative investors and investments. But overall, we are seeing obviously a series of major high, higher high, higher high, higher high, and low, higher low, higher low, higher low. So overall market structure clearly is on an uptrend, making higher highs and higher lows. Now we're looking for the higher low. So where would we think would be a best place to be looking for a potential higher low within this structure? Well, we can see just within this zone here that there's going to be a previous high, which could act as a new level of support. So let's look at that. Initially, to the right of the chart. Well, that was a key level of support back in March. That's pretty interesting. And then back in the summer of 2019, we see it was a key level of support. We had a nice consolidation zone that did break towards the upside. So we know that this was a floor before. Also, we see it back in 2018, late 2018. This was that massive sell-off we had back in 2018, and then we had a huge rally in 2019. Very, very volatile time. And we're even getting a more volatile time right now. But in terms of where we could potentially bounce, I think 1453 is a pretty good level that we could find buyers to be located. And that would then just create the next leg to the upside, which would then create a risk on sentiment yet again in the overall market. So that's what we're trying to gauge is, are global investors on a risk on or risk off environment? And that's basically going to structure a lot of our overall global macro trades, because that's going to determine if people are going to go, for example, into gold and silver, or away from gold and silver into risk on currencies like exotics, Turkish lira, if we're going to go to the South African rand, or risk off US dollar, yen, Swiss franc, all that stuff. Cryptos is a little bit less correlated than everything else in terms of I would say, difficulty of knowing exactly if it's a risk on and a risk off, because people treat it like gold, but then it's highly correlated with the Russell 2000 right now. So BTC is kind of in the middle, but I do think if there is a market sell-off, Bitcoin will sell off as well, definitely. Not a guarantee, but I think that's a very strong chance that it will occur. So if equities markets fall, any risk on type of asset will probably fall with it, along with currencies, cryptocurrencies, equities, and many others. So that's going to be my analysis for the Russell 2000. Not going to get into the other ones. Quick look at oil, both Brent and WTI, Western Texas Intermediate. So crude oil is doing pretty well, or oil overall is doing pretty well. We're seeing a strong level hold here, previous level of resistance at around $37, new level of support. We see decent buy volume coming in, more buy volume on the way up than the sell volume on the way down. Overall looking pretty good. And we can see that the bonds not doing bad. This could be a nice little retest for this reversal where we get a base to form right here. You could call it a potential reverse head and shoulders, but you're getting a strong push to the upside and a pullback if it is able to hold this 1.4-ish range and 0.77 on the 10-year. That would be pretty solid for the continuation to kind of continue going forward. But with how strong the momentum was to the downside, let's just talk about the higher probability situation that's occurring here. So we see that this was the first structure that we had, and this is a nice ascending wedge. Right now, we got an ascending triangle that broke to the upside, but this could definitely turn into an ascending wedge. That is a high probability situation with how strong the momentum is to the downside. Just something to consider. But right now, we are not really seeing that continuation pattern just yet. We just saw a break, making a new high, breaking the recent highs, strong bullish candles, and now we're getting our pullback to validate the previous resistance as of now. So that's the 30-year and the 10-year. And now we're going to go on to gold and silver. So one thing I haven't done is I just switched to AXU USD instead of gold, just so I get the volume there. And we're going to go from the daily or 2-day and then dive into the smaller time frames. So let's just, computer lag for a moment there. Let's get our key zones here. First things first, I want to identify this major zone because this is a very significant zone for a potential resistance, and then we got our major zone down here. I think that's all I'm going to put for a key level, and I'll just put that high there just in case, and then we can drop down a time frame. We already know what happened. Let's just talk about it here. So let's go and talk about our snippet. All right, so what happened? This was a major level that needed to break right around 1400 right here. Broke to the upside. This was a very, very long but really solid squeeze that occurred right here. Very strong move to the upside, massive bullish push. You got another consolidation right here. another bullish push, and then you got that March sell-off that was basically sell-off of everything except the US dollar. And then you got a big recovery, and then you got a nice little potential descending trend line break to the upside there. Little bull flag or a descending triangle there. And then you got another move towards the upside. There's the next squeeze that occurred right there. Did not hit target. You're looking for kind of that high right there to get hit. Did not get hit, but that is life. And then it started retracing down. And then this previous resistance turned into a new level of support multiple times. This zone was also a confluence zone for this horizontal area, so we had a confluence of this support zone right here, and the question was now, we know that we have a support horizontally, and on the descending zone we could see another move to the downside like that, and then go deeper into the correction or the consolidation, depending on the severity of the descendingness of that descending resistance. But we can see it does look like we could potentially break to the upside here, where we have a descending zone and then we have another descending zone right here. Let's just put our mid-range zone right here, and then we have a nice horizontal zone creating a strong level of a support. So it does look like if we are going to be creating another continuation pattern, that was one of them. Let's just get this off, and then let's use a green one just so it's really easy to understand what we're doing here. So this is the continuation pattern. This is the move. It didn't get all the way up to this zone here. This is the continuation pattern. We could see another move like this. So overall, that's going to be the structure we're looking for. So now let's draw it in. We already have talked about this triangle. We don't really need to go over it. Let's just jump to the 4 hour here and draw our nice descending zone like so. And that's going to be the potential new level of support that we see within the market structure. And then we can put our support right here. This was our expanding zone. Let's get it proper with a type A and type B like so. And then let's get our midpoint like here. And now we got our structure, and the potential was a potential, let's get it green. This was the idea, is we're squeezing closer. You have two options. Option number one would be to move towards the upside. Option number two would be to fail, probably test this resistance again, because we've tested it multiple times and we've broken, we've held this zone too, so we would test this one more time, and that's where we'd be looking for potential short opportunities to the downside. You got a main target here and you got a mid-range target potentially depending right around here. So that would be the structure that I would be looking for if we did sell off, but we did not actually sell off. I can't, let's go like this. Not sure why I can't do any of that. Okay, let's go like this. All right, so that's going to be my overall thought on gold. I am still looking at it as a potential consolidation because we do see that there is a resistance right around here. Got to take that into consideration. And then we got our support right around here, creating our key level. So we're currently in a consolidation sideways, and I don't want to be too early to say that we should be looking for longs. I think once we break that horizontal zone, it's going to be a little bit better, but that's going to be something I'm willing to wait for personally. Let's just draw in another potential zone where we could be pulling back to. This zone right here. So that's going to be the potential pullback area that we'd be looking for in confluence with this descending zone. And what we'd most likely be doing is putting a stop loss below this low. So you'd be looking for an entry when it comes back. You'd be looking for a nice geometric go from large to small. So from there to there would be your biggest target after the breakout. So that would be your kind of final target, 4.35 risk reward. That's very solid. And then that would be your smaller target that you'd still get a decent risk reward on. Let's just look at it. 2.74. That's a really solid risk reward. And then if you get all the way to the main level, you're looking at above 3.5 risk reward, which is phenomenal. So that's going to be the overall outlook for it. I've not entered yet, but if it does consolidate back and hold a new level of support here, I'd be definitely looking at it in a way that allows me to gain exposure if it does move towards the upside. So let's make this a little bit smaller, but that's going to be the analysis for today. Let's just get our bars pattern and find a potential structure that kind of looks like what we're looking for. So I think that's going to be something that we're going to be looking for. So if we go like this and minimize it significantly and go like that, that is going to be what we're going to be looking for. That would be, in my opinion, a perfect situation. You'd be looking for that nice consolidation once it's able to form a base on this previous series of highs. When it broke that previous high with a massive bullish engulfing candle, and then you get that pullback where you get a decrease in volume coming in and a contraction in volatility on a previous key level of resistance on a new level of support. That's a pretty good structure. You'd be basically betting that the consolidation is breaking and you're going to get a move to the upside, but we have been seeing higher highs still, so the momentum is still towards the upside. So we can see right here, this is another zone that I have been keeping an eye on that is going to create our third level of confluence for the take profit. And then let's get our right here, projection, and then go like that. So that's going to create another level of confluence. So we got the horizontal level that we got all the way back in like 2011 or something like that, 2012. And then we are looking also at the distance, looking at the size of the pattern. So just using basic geometry. So the low would be there. You could just draw from low to high, high to low, and then draw a couple that you think would be something that you could fit as a risk reward here, and then also looking at that ascending zone connecting the higher highs. So overall, that is still a potential opportunity that I do think it could come into fruition. We would need to see something happen, and I think if the risk on environment continues, this is a less likely situation to find ourselves in, because normally when we're on a risk on environment, we're not going to see people flood into gold, really. It's when there's more worry of inflation, market turmoil, you're going to start to see a little bit more bullish sentiment. So, if this structure exactly right here happens, I'd be pretty interested. But if it continues kind of going up slowly, I'm not really going to be super interested. We'll see how it goes, but that's going to be my analysis. I'm not really going to be entering much unless that does occur. Now we're going to look at gold and silver ratio. Has not moved much since we last talked about it. It stood right at the previous resistance, which is now going to be a new level of support on the ascending wedge. Not much to say. We got a long way to the upside, got slammed right back down next to the key level, and we're basically getting stuck there by the buyers and sellers, which is, it's a ratio. I know there's not really a buyer for like this ratio, but we see that it's very, very It's held there very well, but there is this big long wick there. So if we do get a move in the metals, I think we could get another move to the downside here, which would be pretty bullish for silver. So this is silver. 4-hour chart. I would have really liked to see this deep or go deeper into the funnel. That would have been really great. But as of now, we did have a descending zone 1, 2, 3, and this is our fourth touch, and then we broke it. But I didn't really find too much of an edge trading it. We didn't really see a pullback. There was no validation. It would have been nice to see a touch of that support kind of midway between somewhere around there. So if we got a move up, touch there, and then came back down, that would have been a little better. I would have been a little bit more comfortable trading like that. Then it would have been a little better of a triangle. And then if we were to come back, then we would be looking for this structure right here for a level of support. And that would be how you would play it. And then if you just get rid of that and keep this, and this would be how we would structure the trade. But the fact that we were unable to, I don't love the fact that we're not really seeing anything there. I'm personally just going to wait it out and see what happens, because yes, this is a squeeze, but maybe if we could see a potential horizontal zone get created right there, and then we see a series of higher lows squeeze the price towards the resistance, you could get a nice ascending triangle. That could look like a potential opportunity. I'm just going to take this off, and just take all that off. And keep very, very clean chart and see what we get. But right now, I don't really have too much to do. It is looking like it is on an uptrend with a key level of resistance, but in terms of immediate action, I do not really think that there is a whole lot to do. But overall, it does look more bullish. I am going to be keeping an eye out on gold for that nice little consolidation pullback, holding that key level of confluence. And I'm going to be also keeping an eye on the gold and silver ratio. If it does break this support zone, I definitely think it could get all the way to even like 88, 89 from 95 is a pretty big move. And that would imply that silver is really moving to the upside here, which we are definitely looking to capture some gains on. So that is the overall market analysis for the metals, for the equities, overall risk on off sentiment. Surprisingly, it does look like we are in a risk on environment where gold and silver are increasing in price to some degree. We're not going to be seeing the inflation worry type appreciation like we do, for example, in the 70s, in the late 70s, when there was an inflation worry in the United States. But overall, they are appreciating. They're holding key levels of supports, and it is looking pretty favorable overall. So thank you very much for watching. Really appreciate you coming. If you did find it useful, entertaining, informational, it would be great if you would subscribe to our channel. We do provide updates for global macro and cryptocurrencies. We will do one for crypto as well here pretty soon, so you'll be able to know what's happening in that front. We've got a pretty big move. I'll talk about it in that video, but that's basically it for today. If you have any questions, please drop them in the comment section below, and we'll be sure to answer all of them that are relevant. If you find it useful, or if you have any questions about like what we use, anything like that, what is our system, how do we trade, all that stuff, it would be not a problem for you to ask, and we'll be able to help you out. So thank you very much for watching, and until next time, have a good one.